Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today we're diving into a report from Akari Therapeutics, PLC, and let's just say things are a little bumpy. We're looking at a Form 8K filing from Akari Therapeutics, PLC. Now an 8K is essentially a report companies file to announce major events that shareholders should know about right away. Think of it as a company's urgent news bulletin. And the news for Akari Therapeutics, PLC today isn't exactly sunshine and rainbows. If you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we discuss these filings in real time. The main event here, the reason for this filing, is a notice Akari Therapeutics, PLC received from Nasdaq. It is about their stock not meeting a crucial requirement for staying listed on the Nasdaq exchange. Specifically, it is about the minimum bid price. Nasdaq has a rule, listing rule 5550-2. That says a company's stock needs to trade at a minimum of $1 per S-share. If the stock price stays below that dollar mark for 30 consecutive business days, that is a red flag. And sadly for Akari Therapeutics PLC, that is exactly what happened. Their American Depository Shares, or ADSs, which are basically ways for investors to trade foreign company stock easily, have been trading below $1 for that critical 30-day period. Now, this doesn't mean the stock is going to stop trading tomorrow. Nasdaq is giving Akari Therapeutics, PLC, a chance to fix this. They have about 6 months until May 25, 2026 to get their stock price back up. To do that, the ADSs need to close at $1 or more for at least 10 consecutive business days. It is a deadline, and it is a serious one. And what happens if they don't make it by May 25th? Well, there is a potential second chance. If they meet other listing requirements, like the overall value of their shares available for public trading, they might get another 6 months to comply. But this isn't a free pass. They'd have to formally tell Nasdaq they intend to fix the problem and make a plan. If after all that, they still can't get their stock price above $1, Nasdaq will then move to delist their ADSs. That means they'd be kicked off the Nasdaq exchange. At that point, Akari Therapeutics PLC would have the option to appeal this decision before a hearings panel. But that is a last resort. So what is Akari Therapeutics PLC planning to do? They say they're keeping a close eye on the stock price and they're considering options. One interesting option they mention is a ratio change of its ADSs. This means they could potentially change how many ordinary shares one ADS represents. For example, they could consolidate shares so that fewer ADSs represent the same number of underlying shares, which usually aims to boost the per ADS price. It is a common tactic companies use when facing delisting due to low share prices. Now let's get to the broader picture and what this means. Akari Therapeutics. PLC is a biopharmaceutical company focused on developing therapies for serious diseases. Companies like this often have volatile stock prices because their success is tied to the unpredictable outcomes of drug development, clinical trials, and regulatory approvals. A low stock price, especially below $1, can signal a lack of investor confidence or significant concerns about the company's future prospects. It can also make it harder to raise capital, as investors might be hesitant to put money into a company that is struggling to maintain its exchange listing. When a company is on the brink of being delisted from a major exchange like Nasdaq, it is a serious warning sign. It reflects that the market, the collective wisdom of investors, perceives the company's value to be very low. This isn't just a technicality. It directly impacts a company's ability to attract investment, retain talent, and even engage in strategic partnerships. Imagine trying to convince another company to collaborate with you when your stock is trading like a penny stock and you are facing delisting. While this filing focuses on the delisting notice, it doesn't provide detailed financial numbers indicating why the stock price has fallen so low. This 8K is about the consequence, not the root cause. To truly understand Akari Therapeutics PLC's situation, you'd need to look at their financial statements, particularly their revenue, expenses, cash burn rate, and the progress of their drug pipeline. Are their clinical trials failing? Are they burning through cash too quickly without a clear path to profitability? These are the questions that drive a stock price down. Without that deeper financial look, this notice is a symptom of a potentially larger problem. Looking ahead for Akari Therapeutics PLC, their immediate priority is clear: increase that stock price. A ratio change, as they mentioned, is a potential quick fix for the appearance of the problem, but it doesn't solve underlying business issues if their therapies aren't progressing as hoped or if they can't secure sufficient funding. Artificial adjustments to the share price won't prevent future struggles. The real challenge will be demonstrating a clear path to sustainable growth and recovery to regain investor trust. The clock is ticking, and they have a lot to prove in the coming months. So what is my take on this? Akari Therapeutics PLC is in a tough spot. While they have a chance to fix the listing issue with a stock consolidation or by improving their actual business performance, the fact that they've fallen below the dollar threshold for so long indicates significant investor concern. The lack of immediate financial detail in this specific filing means we can't pinpoint the exact financial problem, but the outcome is clear. They're at risk of being delisted. This is a company that investors should watch very closely, but with a healthy dose of caution until they can demonstrate a sustainable turnaround. Alright, that is our breakdown of Akari Therapeutics, PLC's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they can turn things around? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.